Good morning, good morning. Hey, Howard, how are you? How's everybody doing this morning? Happy Friday. We made it. Oh boy. So, interesting night. Hey, Moran, how are you? So, let's dig through this. Yesterday, we had another move up, right? We took out that electronic session high and, well, not electronic session, that was the half day or whatever, and put in a new high on the ES. And I said, you know what? When we when I left the room around the close, which is around 9 o'clock my time in the UK, I said, look for lower in Globex because the that bid, that relentless bid, is not really there at night. So as soon as we took out these levels here, that's what caused these single prints. So that's a chunk of supply, which is above 63.12 right now. And anyone who's trapped long, sort of over 63.19, they all sold out. Overnight inventory is short because the bulk of the trading and the volume is underneath yesterday's close. Hey Johnny, how's it going? Exactly. Today's the day that you keep the money that you made this week, right? That's what Friday's all about. Friday's all about being a greedy bastard, keeping the money you made, don't give it back, get it out of your brokerage account, don't try and grow your account, take the money and run, right? So, right, we're hit and run traders, right? We're not fund managers, you know, we're not trying to gather assets under management. We make some money, take it and run. That's how we trade. Hit and run, you know? And it's the only way to always have cash. So, now we're kind of stuck. We did a little look below and fail of the previous day's low. And we're kind of stuck going back and forth in this area here. So let's see. I'm thinking if we break 6,300, we'll come and test yesterday's low again. And remember what we were saying about sort of trend, where we had, we were trend up, right? Higher lows, and then we break trend, right? Now, what is this? This is This is what we call an inventory adjustment or an inventory correction. And then you resume trend again. So what you have to do, folks, and it's hard to do on a Friday, right? On a Friday, you have to wonder whether or not, is this an inventory adjustment or the start of real selling? Now, how this market gets people every time is they fall for this. They fall for this sell-off, and they think, oh, okay, this is the start of lower prices. And then the market just picks itself up and resumes trend again. And especially on a Friday, right? Let's be a little careful. So what are our warning signs if you're a short seller? Well, if you're a short seller and regular trading hours come around and we cannot take out yesterday's low or the overnight low, be careful. Govern yourselves accordingly, okay? If we take out yesterday's low and the overnight low, then you'll be looking for the lows here because those will be swing lows that if you break those, the inventory above is likely to come falling out, okay? So beware of that, right? Because markets will go up, break trend to adjust inventory. That also allows people to, what have you guys been told? To buy the dip. They start trend again, then they do this. Now, when they do stuff like this, when people get short here at the wrong place, they help push the markets back up, right? That's leverage. So don't be leverage. Okay, so last night, the president announced more tariffs, notably on Canada, around the same time the market dropped. Okay, so because it's a thin market, thanks VS Squad, because it's a thin market, right? What does a thin market mean? A thin market means there's not many orders in the order book. So if a big bunch of sell orders comes in, the order book thins out. It parts like the Red Sea and price just drops. That's why it'll be trading up here. Chunk of news will come in and kaboom. There's no orders to absorb the selling, right? And these markets are extremely, extremely responsive. So if you drop a large size buy or sell order into this ES market, if you drop a big sell order, all the buy orders will instantly disappear because of electronic trading and how efficient these algorithms are. You'll see when he was screwing around with the tariffs the first time in April, the order book would be, I don't know, we'd have usually, 50 or 60 aside or even 100 aside, and it would drop to 6 contracts aside, which means where people were buying 50 or 60 contracts at each tick, they're now buying 5 or 6. So if you drop a 500 contract order, it's going to take the market down 15, 20, 30 points to find the next big piece of size, right? And that is something that we're not used to, right? We're not used to that thin order book. And that's why when you look back, you had these huge weekly ranges and daily ranges. Remember when we did 500 points in one day? Well, that's why. Because the order book is very thin. And when you have thin order books, it does not inspire confidence. Like right now, if you look at the ES order book, right? It's about 20 to 30 contracts per tick. So if I went and dropped a large sell order, that would just drop from like 20 contracts to maybe 1, 2, 3, maybe 6. Everyone would just pull their orders out, except us who have our orders sitting there because we're not fast enough. Does that make sense? I've done videos of this in the room, and I've posted examples of what a thin order book and a thick order book look like. Okay. And the reason why I'm talking about it so much is because it affects how you guys trade. Okay? So when you're trading Globex and news comes out, always make sure that you have a stop in And if you see price moving around a lot, don't just jump in there. Wait till it calms down. Okay, that's the takeaway. That's the practical takeaway from what I was just talking about. Okay, because everything we talk about here, there has to be some sort of practical takeaway for you guys so you can manage your business intelligently, right? That's what it's all about. As a retail trader, you have to manage your business intelligently. And you can't do that if you don't understand how the business works. Just saying. All right, moving right along. Hey, John, what's up? How was the day in paradise? Good? Oh, that's nice. It's going to be a hot one in Liverpool today. So let's go look at see how we're going to trade this. My balance zone is 62.98 half to 2 1/4, 63.02 1/4. Double it to 9 3/4, double it again, and this would be 4 times. It would be 24 3/4, and 4 times down here I haven't done yet. So we just did a little look below and fail of 63.02. Overnight inventory is short, which does favor long trades, right? Yes? No? You guys all ready for the weekend? Right? Seems like you're ready for the weekend. So, how do I trade this? What do we do? Okay. Now, if you're building a position and you're starting to buy in and you start getting long a little bit here, right? Why would you be getting long here? Well, the market's above VWAP, right? So VWAP's at 3. Say you start buying the 4s, right? You know, grab one at half, put in a bid at 1/4, put in a bid at 4, right? If the market starts breaking VWAP, then you know. What do you know? Come on, guys. I know what happens. Anybody awake? So I'm long 2 at 4 3/8. I'm going to put an order out at 5 3/4 and see if I get somebody tickles it and takes it, right? Uh, hang on a second, John. There. One purple line, VWAP. All right. I'm long 4 3/8 on 2 contracts, offered at 5 3/4. Can I sell it at 5 3/4? Out one at 5 3/4. Where's my next sell order? Well, I'll go 6 1/4 and see if we can get over 6. Right? This is simple, folks. Come on. Come on, come on. Hey, Dave. It's okay. You don't have to comment if you're driving. Please keep your eye on the road. I'm talking to the people in the room, trying to wake them up. Right? So I'm long my last contract. I'm long at 4 1/4. I'm offered at 6 1/4. If I do not get taken at 6 1/4, what do I do? As I play the music from Jeopardy. Come on, guys. Simple trade here. We're not trying to figure out cold fusion. Right? What do? I hit the bid and I'm flat. Right? There you go, Shark. What was my stop on that? Just under there. Right here. Just under VWAP. Right? So why did I hit the bid instead of being stubborn and saying I have to sell at 6 1/4? Well, because nobody was willing to pay 6.25. So I don't want to sit there like a doofus with an order that nobody wants to buy. Hit the bid. Trades in profit. Right? Nice work, Moran. Nice work. Now, for those people who have their stop at break even, there's no point even doing business. Right? When you're long, put your sell orders out. Right? When you're short, put your buy orders in. That's how you know if your trade's working. If you're long and people are buying your product, your trade's working. If you're short and people are selling into your bid, your trade's working. If neither of those things are happening, your trade's not working and you have to adjust how you're doing business. It's really simple, but you have to think in a simple manner. You can't overcomplicate this, right? So I'm long, you know, at a certain price. I'm putting offers out to make sure that the buying is there. If nobody wants to buy my product, I'm out of the trade. Make sense? It's just blue collar trading, James. Just blue collar trading. How long or what circumstances will you let a trade work before you bugger off? As soon as I see that there's no interest in my product, John, I'm gone. I don't have the luxury to sit around and let the grass grow under my feet. Right? You're a trader. You're not an investor. Right? So you have to think quick. This is why I like getting you guys to trade on a 1 minute chart. And then people will go, it's too fast. I want to do it on a 5 minute or a 15 minute. And all that means is you end up losing more money because you haven't been trained how to react. Right? It's just like anything else. Right? Like if you were teaching a pilot, John, and you hit turbulence and he goes, well, maybe I'm going to get the book and maybe I'm going to look to Twitter to see what I'm going to do. That's not a good thing. Right? You got to be trained how to react. Right? Okay, Mike. Whatever you're smoking, I'll take two. Yeah, whatever you got going on there, Mike, I'll take two of it. Just put the sell order out, man. You know what I need to do with you, Mike? We need the hot tub time machine, go back in time, put you on a trading floor with no computers. Right? That's what we got to do. Right? Get all that zero and one stuff out of your head. Just put the sell order out. Who cares about the amount of time that's passed since a new tick up? Do you understand what I'm saying, brother? Why does that even matter? I buy something at a certain price, I put some sell orders out. If nobody buys it, then I know nobody wants it, and I lower the price. Does that make sense? If it doesn't make sense, you and I, we need to do a phone call. I'm sorry, I've just been really busy, but I can't answer a question that that's not relevant, right? Yeah, you know how to do it on the keyboard yourself. I don't know how you program that. I don't know how you program that, right? I have no idea. Do you believe volume footprint can get the same results? as what you do with TPO and volume profile. I don't use footprint charts, James. If you notice, when I took that trade, I used a 1 minute candle chart. This is just a map of the city, and I wasn't looking at this at all when I was trading. I was focused on this. In fact, when I'm trading, all I know is where the stops are on a half-hour bar. Here, I just look at this. If I'm long and the offer is moving up, I'm in good shape. If I'm long and the offer is moving down, I'm not in good shape. I think the footprint charts are a huge waste of time. I think if you can get all of the information off of one chart, why wouldn't you? Then you could actually execute, right? Like if you were in a street fight, which is really what trading is. If you're in a street fight, are you going to be stopping and thinking about, Pythagorean theorem and Euclidean geometry? No, you're going to get punched in the face a lot. You better like get in there and move around and get your work done, right? And the problem with retail trading, the problem with chart-based trading is there's no sense of urgency. So people are looking at two or three or four or five different things, a bunch of indicators, a bunch of different charts at the same time, looking for, what do you guys look for? Flatulence, confluence, somethingance, all this nonsense. Just look and see where the buying is and where the selling is, right? And that's what I train people to do at the Trading Syndicate, just to simplify it so you can make money, right? Because the more stuff you look at, the worse your execution is going to be. Does that make sense? Just use a 1 minute candle chart. I promise you, if you can zone in and concentrate for more than 30 seconds, you'll start to see things. Like right now, there's a seller at 63.06. It's as plain as the nose on my face. There are sellers here, right? Why? Right? Let's see, the sellers are right there. Every time we get there, the market can't offer and print above it. There's a sell order there, and then they compete and push price down. That's why if I was long here, when I was long at 4 and 3/8, I sold into that. Does that make sense? You sell your goods before somebody grabs your customer and takes away your customer, right? Everybody's trying for home runs. Trust me, every once in a while you will get a home run, okay? But you just can't go up to base every time and try and hit home runs, right? You know, base hits add up. I'll tell you a story, guys, since it's slow. There was this brokerage firm in Canada, and it was a French brokerage firm out of Montreal. And they had a couple, like I think 60 to 80 guys and ladies in that firm, and they were like just grinders, we used to call them. They just day traded in and out, a couple of $100 here, a couple of $100 there. And we used to make fun of them because they used to bring their lunch, right? They brown bagged it, you know, all of that stuff. And, we were young and hot shots and making a couple of $100,000 a month and stuff like that. And these guys were grinding literally for $500 here, you know. And, but I tell you what, when one of the hot shots blew up and they needed to borrow a couple of $100,000, the grinders were always flush. They always had cash, right? The young hot shots would blow themselves up and they'd have to go borrow $100,000. They'd go to the guy who was wearing the acrylic sweater who brought his lunch in a brown bag. No Rolex. You'd be wearing like a $10 Casio cheap plastic watch. But they were all liquid. They all had a couple of $1 million stashed away, and they were liquid. And they got that from going in and out of markets, right? Something I learned a long time ago. Never really thought of them until I started retail trading. You know, because everybody wants that. Oh, you know, I made $50,000 on this trade today, and you know, now I'm gonna go lie on the beach, right? It adds up. The base hits add up. They really do. If you do in stocks too, you can just use a 1 minute chart if you're scalping, right? It's pretty simple. You can tell where the buyers, you know, where the buyers are. You know how you tell where the buyers are? It's where the sellers stop selling, and then they'll lift price. And if you're trading stocks, you can just watch the offer, James, right? Like if you're trading stocks and say the spread's a penny and the spread starts getting bigger, you'll see the offers move up. That means the buy orders are coming in. Just things like that. And you just watch the prints, right? For stock trading, you can use the time and sales. It's really informative. You'll see if there's a backfill, if there's a backfill with a give up, which means it's an offshore seller. If it's a backfill within the same time, if it prints at the same second, it's an automated order. If there's a time give up, it means the trader is entering the trade manually. The tape tells you a lot more than it does in futures. Right? Sometimes you'll see, like, if a stock's $5 bid and somebody sells 100 shares and it prints at 501, 502, that means they're price improving, which means there are bids under 5 that you can't see. Things like that. Yeah, the seller's still there, Mike. No, retail brokerage time and sale should be the same in stocks because unlike futures, stocks all have the same data, right? In futures, the annoying thing is each brokerage firm, each data feed is different. So you will get different data. It's really quite frustrating, right? If you look at the volume on my TPO chart, then you look at somebody else's TPO chart, it'll have different volume. But in stock trading, it all comes from the Nasdaq or the NYSE, right? And it's not aggregated. It's just pure raw data. Oh, hey, the seller at 6 is starting to lift. Well, they're back. See, watch the red line as it goes back and forth over this white line where I have sellers. Right? It lifted momentarily, filled an order, and came back down. So there's still price competing at 6. So when sellers price compete, what they're doing is they're all selling at the same place, right? And they're all lined up there. So James, myself, Mike, Johnny, John, Moran, we're all sitting there selling the 6s. Now, if one of us starts hitting the bids, then we'll start selling lower, right? But as long as buyers are creeping into the store, it doesn't matter how long it takes. We don't mind. If we're long at 3 and 2 and 1, we'll sell at 4 and 5 and 6 all day. We don't care if it goes to 7, right? Size sellers just want to get rid of their inventory. As long as the people are coming into the store, it's good. Now watch as we get down to this 5 area here, right? Check this out. If someone starts competing really hard, the offer will come underneath and will come down to this 4 area. And if you watch stuff like this and you spend some time watching, you will learn so much about real order flow, right? You don't have to look at level 2s or DOMs or any of that stuff. Exactly. It's like a little mini balance, right? It's a little distribution balance, right? Because the market went underneath 3. We grabbed some cheap product. We're getting rid of it between 5 and 6. Right? And if we hold price steady enough, if enough buyers come in, then we can start raising price. So the next place that we'd look for sellers, see how they're selling at the same place here? Right? London's opening. Let's see what happens. Just keep it simple, folks. We want you to make money doing this. Right? This is one of the most frustrating small businesses you can possibly get into. That's why in our room, we want to give you practical information. Next target will be around 8 3/4. And the reason it's going up is because overnight inventory as a whole is short. And that's why I have this TPO chart here, because it tells me the close of business is here from yesterday and all of the overnight inventory is underneath it, right? So the volume point of control is down here at 62.92 half. That's where all the inventory is priced. They got some cheap goods and they're selling them up here. That's why they can sell it down to 63.01, stop selling, and the buyers come in. It's beautiful. Once you understand the mechanics of how markets work, are you going to get stopped out? Yes. Are you going to take bad trades? Yes. We're human, but it's going to be less. You know, it's going to be less. Did we hit 8 3/4? Yeah, close. Now, how did I know that we were going to stop at 8 3/4? Right here. See? See the tops of those two candles? That's where they're going to initiate selling. It's unbelievable that it's that simple, but it is. It's just that ever since electronic trading became popular in the 90s and they started building all these chart platforms and everything, they came up with all sorts of ways to try and build a better mousetrap, right? I've seen trading software that's what, $2,000, $3,000, $4,000, and you don't need it. Now let's see if we stop selling when we come down to the fives. If we don't, we'll go tickle VWAP down at the threes. See how we stopped just when we came into the fives and the offer's starting to lift? Now it's offered at six. There's a seller at six, so they're going to compete now. Push it down. As soon as it finds a large buyer, the offer will lift. That's how you tell where the buyers are. It happens so quickly now because electronic execution is so efficient, right? And VS, we're right back into that little mini balance that we just launched off of. I'm looking for my next trade here. I'd love a look below and fail of 2 1/4. That would be perfect. I got some bids under 4. That's going to be choppy for a little bit. So right now, when it's chopping around like this, I wouldn't take a trade. This way you can be relaxed. You're not getting stopped out going long, short, long, short. Let the large traders work this out and wait for an edge, right? Wait till it looks below 2 1/4 and comes back up, or looks above 9 and comes back down. But when it's chopping around like this, instead of getting frustrated because you missed a trade, right? Try and put your mind in a relaxed mode. As soon as you see chop and as soon as you see tight candles, it means the business is slow. So you should just mentally relax. When you mentally relax, you'll be surprised at how much you can see, and you'll be surprised at when the real trade comes, you'll be ready for it. Because we always do the same thing. And I'm guilty of that too, right? Until I figured this out, I would trade, you get stopped out. You go long, you get stopped out. You go short, you get stopped out, right? That happens a couple of times, it starts screwing with your head, right? And then all of a sudden, the trade that you were really waiting for comes and you're so pissed off and frustrated that you don't take the trade, right? So when you see price action like this, just go into a kind of a chill, relaxed mode, right? It'll help. I think after the first, 6, 7 months of this year, I think the next 4 years are going to be very, very challenging trading conditions for us. The markets are going to change weekly. Sometimes in the middle of the week, they'll change agenda. This guy keeps changing the macro with his tariffs, and then people get tired of that. He's going to find something else to shake markets up with. So you really got to be on your toes, and you really have to be able to adapt. If you're having trouble, come by our room, message me in the room. I'll sit and do some work with you and, see how I can help. We came back to VWAP. There's 2.25. Yeah, the 1 minute works really nicely, right? Can you explain when the price jumps the bid or ask near those areas of sellers? It's kind of hard to like pin it down, P Hunter, with electronic trading. In the old days when human beings would put in orders, it was a lot easier to explain because there's so many participants now and so many people running different kinds of software, right? Guys like Mike who do the algos for this stuff, he might know the answer. Under 2.25, I'd be targeting 98.5. Let's see if we can take out these lower stops. It's a two-sided market tonight. Like when the order book's thin, you'll see sometimes like the spread's always supposed to be like a tick, right? You'll see the spread start to get bigger, even in futures, right? Like the offer will start to move higher and the bid will just stay there. Okay. So if we get above VWAP, go long a little bit here in the threes. Got my stop at 2.25. I'm early. I'm gonna end up scratching this. Like already I know that I'm early. Let's see. Should have waited. Coffee's a little too strong this morning. Just watching the offer. I'm long at 3. And if we break 2.25, I'll scratch the trade. Yeah, I'm early. I'll let it work for a minute. I'm gone. That was too early. Too early. What I'll do now is I'll let the large traders work out 2.25, and if they can get this thing over VWAP, then I'm interested again, right? See, everybody gets stopped out. It's not the biggest deal in the world. It tells you that you're too early, right? So I was long at 3. I was out at 1.75. And that is my biggest issue is I trade too early, right? And that's just 25 years of trying to be the first guy. In retail trading, I have to always remind myself that I don't need to be Johnny on the spot. It's okay to be wrong. Just don't be stubborn and be wrong, right? So as soon as I realized that I was too early, now I can relax. Instead of like, and what I used to do is I'd get in, get stopped out. I'd be like, oh crap, should I be short? Be hunting for the next trade. Now I kind of take a step back and let the market tell me, right? And that's kind of hard to do because you feel like you need to make up that money that you just lost, right? Right? We're going to take losses. We are going to be wrong. It's just the way, that's just this business, you know? We just don't want to, it shouldn't cost all our capital, right? There's 98 and a half. Now let's see where they sell this thing down to. Now I'm curious if we can hold 96 where that's where that yesterday's low is. Oh, good stuff, Chard. There's one thing I learned when I worked in the industry. Sometimes traders would get into trouble. And as soon as a trader got into trouble, the good brokerage houses would take the trade away from that trader and give it to somebody who's not emotionally attached to the trade. Because if the trader got into trouble, usually 9 times out of 10, unless they really know what they're doing, they can't trade their way out of it. But if you put a fresh set of eyes on it who's not emotionally attached to the position, they can trade out of it. Or they can cut it before it gets really, really bad. You know what I mean? Now, let's see. Do we do a look below and fail of 98 and a half? Mm. See, this is where I always fall for this green candle, right? Watch it work this time. Let's see if it works. So look below and fail of 98 half. You know there's going to be a seller up here, right? I'll give it wait for the next candle. and see if the next candle can hold 98.5. There we go. Long a little. Offered at 1.25. Move it down to 1. Come on, take me out at 1 and 1.25. There we go. Right. So that one actually worked. Right. Did I get 98.5? No, I was long 99.5. Right. Um, if you're using Sierra chart, P Hunter, go to chart settings and underneath, I think it's performance. Display, it's under display. Chart update interval in milliseconds, and I've got mine set to 10. Nice work, Mike. Nice, nice. You know what, Colin? I've thought about that, but I haven't done the work to justify a proper answer. So Colin's asking, when the spread widens for just a second, does that indicate a change of direction? In equities, it usually does. I have not done the work in futures to actually be able to answer that intelligently. If I was long where you are, Mike, I know that there's going to be sellers at 2 and at VWAP. So what you do, Mike, what I do is say you're long here, right? Say, hang on. Okay. Say you're long right here, right? You know there's going to be sellers at the top of each of those candles, so you front run them. I think Thinkorswim you can do that as well. They've got a million settings in that software, but I haven't used it in about 3 or 4 years, so I wouldn't know off the top of my head. And back down. Oh, overnight point of control is up here now. Let's see. Gosh. I'm watching 62.96. Could be. When a market makes new highs, it's always kind of interesting to watch and see what the next move is. I'm not good at predicting what's going to happen, right? All I know is if we hold Yesterday's low and the overnight low going into RTH, it'll rotate higher because it just always does. Right? If we take out that overnight low, then 62.76 or 75, and then 62.62 are the big levels to the downside that I'd be looking at. I mean, we do need some liquidation. It would be very, very beneficial to get some good selling. There's yesterday's low. If we get accepted under yesterday's low, you'll be looking at 87.5. Let them work this out before you jump in. If you are buying yesterday's low, right? If you're buying 97, 96, remember if it breaks 95, right? It's really hard to find where the bid is going to be. So don't waste a lot of money on your stop. Okay? And there's going to be sellers at 98.5. So just remember that, right? If you're hacking around this previous day low, watch the offer, right? The offer's moving up, you're okay, but there's sellers. The offer will tell you where the sellers are engaging. And if you're a long trader and you see the offer moving lower, pay attention to that. If we offer underneath the previous day low, that means those bids have moved off. Don't look at the DOM, just watch the offer. Sometimes you have to really go and break that low hard. Force the selling and see where the buying is going to come in, right? Give it a good kick. See how it's offered under yesterday's low now? And it's going to go back and forth because there'll be a bunch of orders around here that'll start popping off. So until it clears up, right, I wouldn't go long until we get back up over 97. Give it some room to breathe, right? If you're trading off TPO. Here, I don't really see a trade using the candles. So I'll just let the market work this area out. And that just keeps me from over trading. Because I used to always jump in, get stopped out, right? Oh, it looks underneath and comes back up in 10 seconds. And then another seller steps in at 96.5, right? This way, there's no reason to go buy 96, 96.5 when it's being sold at 95. Let them sell it off. Let them find the bid and then you go and do business, right? Let the large traders spend the money, right? There's no reason for you to be involved in this. Let them figure it out. Once they figure it out, you won't get the actual low or the high, but your trade will have better chances of working, right? And that's what we care about. See, if I had been long 96.5, 97, definitely be stopped out, right? My short game isn't really good this week. I'll have to work on that. Do some chart replay over the weekend and try and get my shorting skills a little bit better. I've missed some decent shorts. So you're always working on stuff, in this business. You're always working on stuff. See, there's that 97. Just remember, if you are going long now on the look below and fail of 96, right? Remember to sell into strength, right? Hey, well done, Von Scott. Well done. Congratulations. Right? And look for where the sellers are. They'll show themselves, right? So if you're long 96, 97, don't be afraid to take some profits, right? There you go. Wait a little while. Yeah, exactly, Mike. Maybe the real returns of the drawdowns that we dodged along the way. The benefits of preserving capital are really not talked about because everyone's just focused on profit, right? But there's something to be said for the money you didn't lose. Anyway, right? See, like, you're young. You never worked for those 60, 70-year-old guys who were really cheap that owned the brokerage firms, right? That's one thing they taught you is how to be cheap. You know, the old guy that owned the brokerage firm that I first worked at, try and get $100 out of him, you'd have to take it out of his cold, dead hands. Good luck, you know? All right, folks. Thanks so much for joining me. Come visit us at the Trading Syndicate. Use that 25% off code. It's like 50 cents a day, and we'll teach you practical, real-world information, right? No double talk, no fancy software. Just a little bit of common sense, a little bit of wisdom, and a lot of good business discipline. And that's the thing to this business, and repetition, putting in the reps. Have a wonderful weekend, everyone. And for those who aren't joining us in the RTH session, otherwise we will see you at 9 a.m. Eastern Time. Thanks for being with us. If you have any questions, you can always DM me. I will be around. And for those who are interested, I'm working on that new video on how to build positions in choppy markets. I'll have that out next week. Thanks, everyone. Hey, nice work, P. Hunter. Well done. Beautiful. Beautiful. Now, don't go spend all that money on some fancy stereo now, okay? That's from Mr. Deeds. I love that movie. Have a good one, everyone. Be safe out there. Thanks so much for joining me. Bye for now.